All right, if you guys want to go ahead and click into the stream, you can see it there. You should be able to see the Weeble in the background. You guys want to go ahead and get on there. If you have any issues, just type it in the chat. But I think we should be good. I think maybe caps out at 50. Hopefully don't hit 50 so everyone can see it. So just start this out. Is anybody tuning in here for the first time or from the free section? You don't really know us. You haven't really seen us. You're just here for the first time. Say something in the chat. Pop in there. Let us know. Introduce ourselves. I want to make sure that we get you pointed to the right resources in a short amount of time so you can start this off right and get in there making money right from the rip. That's the ticket here. The things we preach above all else: protect capital before anything else. Anybody that tells you anything different is ignorant and or a liar or doesn't know what they're doing. As long as you have capital, you have opportunity. As long as you have opportunity, you can trade. If you can trade, then you can make good decisions, make good trades with discipline, and make an infinite amount of money depending on the capital you start with. It's a very important lesson, and the very first lesson we preach and teach at all times. You protect capital above all else. If you are winning 80% of your trades, but you are giving up 30, 40% on every loss, you will end up break even or you will lose money. It is crucial that you cut the losers early and you let the winners ride. We will teach you how to do that with PBU if you haven't seen it. It's a full trading education course we offer for free as a complement to the premium alerts. I recommend you get in there as soon as humanly possible so you lose the least amount of money and don't have to pay tuition to the market. But again, I want to make sure everyone hears this because it is essential. We protect capital at all costs. We're playing the long game, not the short game. This is a marathon, not a sprint. It doesn't seem that appetizing to many people at first, but just keep in mind before we get into these charts, you start with a $1,500 account and you make 3% a week. You have $1 million in less than 5 years. Let that sink in. 3% on a $1,500 account a week, which is a phenomenal return. I don't mean to diminish that. But that turns $1,500 into $1 million in less than 5 years. It might be 3. I can't remember. That's the Tagman example. Correct me if I'm wrong, but I know it's less than 5. So if that's not perspective, I don't know what is. If you're sitting there and you're looking at that account and you have more than $1,500, let that sink in. The only way to achieve that is through managing risk like an absolute professional. That's the beauty of this. That can be done by absolutely anyone. And the way that we have adjusted the alert system, it now provides a no-fail option to that problem. Not a single trade that has anything less than 1.5 reward to 1.5 risk will be distributed in the Discord. You will not see them. Our bot does not allow it. So you will be put in the best possible position to succeed, and I really hope that everybody takes that to heart. Everybody takes that to heart. Maybe is my math totally off? John always gave that example. I just assumed that it was correct. A compounding 3% a week. I don't know if someone wants to figure that out, then correct me if I'm wrong. But nevertheless, even if it is only 300 grand, take a second, think about that. That's astonishing. Astonishing. I know a lot of people, if you saw a $50,000, $100,000 account, you'd be like, wow, my God, that's a lot of money. And it is. And it can be yours. With just a few simple steps that you take, a few simple changes that you make, and a little bit of discipline goes a long, long way. I've trashed accounts and brought them back from the dead by just simply remembering that you protect capital above all else. There is nothing more important in trading. And to be honest, I doubt there's anything really more important in just wealth building in general. But we'll get into that another time. So you guys can see the screen. Everybody good there? If you wouldn't mind popping the chat, you can see the screen. You can hear me all right before we just jump right in. Good to go? Okay. All right. So getting into it, we had Bob up here. That's a very interesting one. I think it's really done well over the last couple of days. So we've got the S&P here. We came into today. This is exactly what we were looking for. For those of you that were here last week, we absolutely nailed it. What's the one thing? I'll wait for your guys' answer. What's the one thing we were looking for to detect a bullish move over the next couple of weeks on this chart? What is the one thing we said we absolutely needed to see? Come on. And I know a bunch of you were here. Let's hear it. What was the one thing we said it was paramount to see? There we go. Board, nailed it. Volume and strong price action. What we had said last week, and I'm going to hopefully have Tyler clip that part into this video so you can see it, is that we needed strong bullish momentum. We wanted to push above 386, but we most importantly, above all else, had to see significant uptick in volume at the very least, equivalent to this day right here on the 22nd, which is about 100 million in volume. We saw 104. Bang, bang, boom, done. I love it. So I would argue that we're going pretty strong bullish into the week. Now, that doesn't mean that we stay there, and it doesn't mean that we're done with the bearish price action. Because again, if you keep an eye on this right here, we were trading down here. We've got this support that was forming. We tried to hold right here. We got rejected, came back down. It tried to push back up, and it held here for that day and then sank, right? And then we saw this huge bearish engulfing. So one thing I'd be very, 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 very cognizant of going into this week is the mother of all bull traps. Very, very, very important you watch that. If we see here again, remember, we pushed up, didn't have significant volume, but it was decent. We closed at about 386, very, very close to where we are now. And then the next day, boom, down, bearish engulfing, we sank, bearish engulfing, we sank, and then we pushed back up. So was it just short-term consolidation and price action, or are we really going to see a move here? I think the weekly chart is the only thing that's going to tell us that. If we look, we've got perfect confluence on what we drew on the daily. Remember, we drew it on the daily because we wanted to get a good idea of each day, pick as many data points as we could. Then we go to the weekly to confirm, okay, that is accurate and it's holding up. So we got support, midline, but support, 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 resistance, resistance. Support turned over to resistance. As we always discuss in PBU, past support can become future resistance just so much as past resistance can become future support. So now what we need to see is, will we continue through range 3? And if you guys were here last week, then you remember we broke this down into 3 specific ranges, and we were looking for trades that we can execute from the bottom to the top of the range, and then from the top to the bottom of the range. We don't ever want to be trading in the middle of no man's land, buying these trades in the middle of nowhere as far as swings go. Day traders, to your own delight, do as you please because it's not as relevant to you. But for those of you that are looking for the easy breezy, take the swing, 3 to 7 days, make good money, and get out of here, we do not want to be trading in the middle of ranges. Very important. So we're trading against resistance here, which isn't a problem per se, but what we'll have to see going into the early moments of the week, like I'm talking no later than Tuesday, is we'd have to see a pretty significant move up, I would argue, to 400 plus. 400 is a very psychological resistance point that I think this price will have a struggle with going over if it can even break up over this resistance. However, I think it is a pivot point in which we can really change the direction of the market here if we are able to break over that point. So again, we're talking just about 400 bucks here. We've tried and failed, and then we did it, failed again, failed, and now we're here. So we really are going to have to see that play out, and I would argue that maybe we could even delineate this range and break it up a little more. But I don't really want to do that, so we're not going to do that. But nevertheless, that $400 mark is a pivotal price point on the S&P that we have to watch. If we're going to be bullish this week, we need to break up strong. We need to open close to 390 and push into at least 391, 392, come back down a little, and then continue pushing over the next 2 days if we're going to test 400. I'm not a big fan of calls right here because I still have this lingering feeling that we might be looking at a bull trap here. I mean, look at how they've sold this thing down perfectly pretty much every time. Like, look at that right across the top. They've done a phenomenal job. Now, we did push up slightly here, just so much as we did here. But remember, just because you push up and break the resistance doesn't mean it's broken, right? It means it's tested. And we do not want to take trades against tests. We want to take trades against confirmation. What does that mean? That means that the price may break above resistance for a moment. It's not an absolute fixed point, meaning it's not we don't then look at it and say it broke resistance, it's got to be done. We want confirmation above all else. It can break resistance and then immediately dump back down. Again, remember, these are market makers that are in the middle of all these trades trying to make money off pinching pennies. So yeah, they run the price up an extra 2 cents to make you think, oh, higher high, we're good. We broke resistance, we're good, and then they pull the rug, and then the ground falls out beneath you, and you've lost everything. We do not need to, nor will we end up in that position if we follow a few simple tenets, right? Manage risk above everything else, trading confirmation, and make sure that we're not buying in the middle of a range. I would argue that those 3 things will not only save you your account in the long run, but it will also grow it exponentially. So we got to make sure we do that. And if I'm going to recap them because you want to write them down, protect capital at all costs, trade confirmation, and then Identify the ranges and trade those. Don't buy no man's land, no purgatory purchases. And what that means is just if this is the range right here from a bottom at like 410 to a top at 420, we're not buying at 418. Just not. We don't want to buy the middle of the range. That's how we get beat. There's not enough money on the upside for that to be worth taking. We want to always maximize our upside, minimize our downside, always know the risk going in, protect capital at all costs, exactly as we've been talking about over and over and over. You guys got this. You understand it. If you don't, please ask questions in the PBU chat, and we will help walk you through it. So, what we got to see on the S&P, if we struggle tomorrow at open, I would think that we could pretty much open up strong with some day trade puts, probably 384, 385, and see how those pan out. Now, it is still risky, right? Because all in all, we could be breaking out of a flag here. Very realistic. It's something to not discount. However, given the kind of macro market conditions here and Powell speaking Thursday, is it something we want to swing? I don't think so. I think this will be a fun day trade bonanza with the SPY over this week, which means, so for those of you that don't know, there's we've segregated the channels now in a wonderful way. They're all clean, clear, easy to understand. Those would be in the day trades channel. We still might put a swing or two in there if the opportunity looks good, but we're trying to focus on making this as easy for you to follow as possible. So right now you have basically as easy as it can be broken up. You have like options day trades, option swings, blah, blah, blah. Rose Zotnik says SPY finally filled the gap on Friday. It seems like SPY has been coming down after it fills a gap to the upside lately. 100% I agree with that. That's exactly what I'm looking at here. You see that we pump right here and we get this inverted hammer on the way up. Resistance sells off, gap down over 3 days. We lose from 420 all the way down to 386. Madness. Now, that also means that we can clean up through this gap because it came on low volume, right? Back on about 819. I think we could clean through that gap if we had a lot of strength. Am I seeing the strength right now? No, not necessarily. Are we seeing hints of what could be strength? Yes. But again, consideration needs to come first, protecting capital. This isn't a breakout, right? Like we're not looking at this as a breakout. This is the S&P. Yes, the volume came in. It's trading against resistance. And then you have another resistance above here, right? So this is ascending resistance. Not a bad thing. Descending resistance, that sucks. Descending resistance means we're in an overall bear trend. Ascending resistance means we're in a short-term bull trend. So look at this as like, this is the 7-day trend, right? Or sorry, are we on the weekly? So this is like a couple week trend. Because again, we did come all the way down from 346. You can argue we still have some upward momentum. Are we consolidating? Yes, but we still have some upward momentum. However, we turn this into ascending support until it broke and fell through. Now it is ascending resistance. Again, not a really bad thing, but it's one of those trades, right? Like this right now, this chart is a chart where it could literally go either way, and there's so much risk on both sides of the coin that it's, again, if we're protecting capital at all costs, we're making smart, disciplined trades on the confirmation. It doesn't fit those parameters. It doesn't make any sense to take on a swing basis. On a day trade basis, totally different. Assess at your own risk. If you don't know how to assess your own risk levels and stuff like that, again, please ask. This year for us as staff, right, is about correcting our own mistakes of falling short in certain ways to educate you guys on stuff that we used to, but then we stopped. Things got busy. This place blew up. You know, we suck in some ways, right? Nobody's perfect, and we're sorry, and we're making that up to you this year. We're making it right. Making good on that promise to ensure that all of you know exactly how to do this the way that you should, that makes most sense for you. Not a cookie cutter template that everyone can apply to everything, because that's not how life works. Like a workout plan for you might be totally different than it needs to be for me, right? We're not going to play pretend that everyone can do the exact same thing and be successful. It's just not reality. But we can tell you is we found enough variety in the strategies, at least between the shot callers, of the way that we all trade, that we do have something for everyone, and we will personally make sure that we are figuring something out for you specifically so that you are going into this trading the way you need to trade, not the way somebody else needs to trade. Keep that in mind in everything we're talking about. So to just kind of wrap this up on the S&P, got this descending resistance. We've got this ascending resistance. We had stronger volume come in, right? Now we still want to see a substantially higher, roughly 4 times higher on the weekly, right? Because again, that's what we saw here. When we saw these big moves up, these big pumps up, we were trading about 400, 500 million shares. This week we traded 341. So we're going to need to see another 60, 70 million additional shares traded over the weekly, over a week, right? This was last week. So we have to see a break, strong break tomorrow. If this is going to be bullish, strong break tomorrow above 390, right? We want to see that psychological point broken. If we come back down, we don't want to go any lower. And this is what you might want to write down than 388.75. I would call that bottom, break even, bottom, be done. If we can hold above there, then I think we can push up and test to 400. It means that it might be a decent trade to take. At the very least, day trade. At the very most, short swing, 2-3 days, hedged to manage risk. I think that we can have a pretty strong play there. Now, should it not? Should it pump 390, fake out, come back down? I think realistically we could see as low as 375, 376. We need to be very aware of that because that's a decent support standing there, 374, 75. If we bounce off there and then we go, that would be pretty cool. I would like to see that. I think that would be health, right? Because we're not going to see this big rebound and boom after weeks of like descending volatility. So I think those are the two ways this trade breaks. And again, remember, if we come down here below 380, then we are more than likely going to see something close to 360 if we can't turn it around quickly. Alternatively, if we can break above 390 and hold with strength, and then we can hit 400 and go above that, then I think it's very realistic that we approach about 420 again, at which point we have two very quality swing trades we're going to jump into that are going to make us a ton of money. It's going to be fantastic. We're going to make a lot of money, and it's going to be great. As far as this week to look ahead, again, those are the two scenarios I'm looking at. The two scenarios I would encourage you guys to look at and be considerate of. And definitely, at the very least, screenshot this chart. Hopefully you wrote it down for yourself and you have all that information in front of you, because I want to make sure you guys are trading this smart and that you are managing risk at all costs. So that's that, and that's all. Now, to flip back over for those of you that are trading stocks, and those of you that are looking for a little bit of a more long-term approach, I want to make sure we're covering everything. LabVIEW is something I like a lot right now. So just to be very clear, biotech carries risk, right? But what I like about it is that biotech also is, in a sense, recession-proof. Biotech is not going to be dramatically affected by a recession, right? So if we sink into full-blown recession, there's not that much effect here, because this is based on catalysts, approvals, PDUFA clearings, news, anticipatory events, not recession. That's a great thing. I don't really think they ever shrink the research. So, what do we have here? Let's dial this back. Let's really zoom out to see what's in front of us here. This thing goes public. It's 239 back in 2016, right? Money's cheap, money's cheap, money's cheap. Runs up to 115. Then COVID, boom, money's super cheap. Let's bet on the world on biotech, up to 186. Then what happened? The clearinghouse opened, and everybody just dumped their allotments, right? But then, this is very interesting. I've been monitoring a lot of different companies and their accumulation patterns, a lot of banks, for example. And I think that this could pose a substantially favorable risk-reward equation. Hear me out. We're trading in this range right here, right? Lee's been trading this up and down, boing, 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 making money up and down because it's stayed range-bound and it's been very consistent. Being very consistent, we know that it's not going to deviate from the norm unless something has changed. Meaning, if it deviates to the upside, great, we won, we called it, Kobe, done. Trades to the downside, we were wrong, this is over, get out as fast as you can, the house is on fire. I like trades like that because they end. There's an end point. There's a decision made, right? We're not just holding, hoping, guessing, wishing, waiting. This looks to be getting a little anxious in this channel, as if it's trying to do something else. Personally, I think it's going to break up. That's just me looking at the accumulation of a lot of large banks and institutional holders. They've been buying this and selling options for it. It means they're like, when they're selling puts, right? Like they're willing to buy it. I mean, they might think that they're going to expire worthless, but they're willing to buy it, which is good. We have a fixed risk reward trade here, which I really like. So, for example, when I bought some the other day, I think it was about 650, 660 last week. I think it was about 60, about 650. So now I set a stop, right? Just below 590. I'm willing to risk 60 cents a share, which is about 10%. It's a lot. It's a lot. But I'd much rather lose 10% and have it be done with and have my capital back and protected when my upside is at the very minimum 30%. Does that make sense? Willing to lose 10 to make 30. Now, I don't think it'll end there. I'm realistically aiming to I would like to see 100% return on investment here. Now that's exaggerated, and I will sell as it runs 10%, 20%, 30%. I will absolutely shrink my position. But my intention here is to hold the core of that position, about 50% of my shares, maybe 60, for a bigger game or a bigger target. I'm going on a bigger hunt here. And I think should we reach this point, which is my first price target, I'm realistically looking at is about $14, where I've doubled my money. I put a pretty substantial position in here. I double my money, and then what? Well, then we watch and wait. Can we hold? If we break that, can we hold above, I'm willing to give some of it back to hold above 1250, at which point then something like a trailing stop or a fixed stop loss comes into play, where we want to really be smart and not give up our gains. We will sell half of the position as we run up, but we also want to be mindful of the fact that we don't want to sell too much too early if this could run. So if it can run, which I do believe it can, and looking at the volume distribution here, this is kind of insane down here, guys. Like, do you see this? What did we just talk about? What does volume have to do with this? What does volume tell us? Someone would please share that with the group. Let's see if you guys remember. What does volume do? What does it tell us? Exactly. Devastating. And volume always precedes, a change in volume will always precede a change in price. It doesn't mean up, it doesn't mean down, it just means it'll happen. That is important to us. And looking at this consolidation here, we're curling, strong buyers coming in off the bottoms for support, right? Strong buying here, support. Strong buying here, buying up under support, and then buying above. Strong buying here, support. To me, that says they're buying the bottom. They're accumulating. They're in accumulation phase. Not a distribution phase, an accumulation phase. I mean, they're scooping up shares over and over and over. This is a great hedge for a recession because, again, it's biotech. So big banks are buying it, institutions are buying it, and I'm buying it. I know Lee is too. I think it's a smart play right now, and I want to keep it on everybody's radar so that you can make a decision based on the amount of risk you're willing to take, so that you can protect your capital at all costs, but also see it grow. So now what do I think is going to happen if we can push above 14, hold above $13? Well, diving into a little bit of history in this chart, we got two moves right here. You got two moves that very much so interest me. This one, right? Oh, God, it doesn't stop. I thought it just ended. I guess you have to click. Sorry. So it's this one. And then this one, right? So we've effectively moved, what is it, 14 to 55? 400% in a matter of 1, 2, 3, 4, 11, 12, 13 weeks on that kind of volume, right? Minimalist, non-existent 20 million shares traded per week. Whereas right now, we're trading about 200 million shares. So if we, and there's another one right there. There's a 24 to 46, there's a 100% move. 26 to 60, that's a 250% move. And then this one, 14 to 55, that's a 400% move. And then it kept going to $185. If this chart doesn't titillate and excite you, I don't know what will. So my thinking here is that we have a very clearly identifiable range here. Let's see if we can get back into it. Because should we be able to clear through this range, right, and then hold above $30, our upside then becomes 5 times. 5x. Why not? Why not? That's why I like this trade. That's why, I'm a big biotech guy. I'm a big trader in biotech. I love biotech. I think it's exciting, interesting, and companies can go from zero to hero in just a moment, just so much as they can go from something to nothing in just a moment. So it carries risk. And again, to be very aware, I want to disclaimer this. This is a 3 times leveraged ETF. What does that mean? It means it will move 3 times as much to the upside, but it also means it'll move 3 times as much to the downside. So if biotech explodes upwards, this thing's going to move 3x upwards. If biotech moves downwards, it's going to greater 3x downwards. Be very aware of that. There is risk carried with this. There are other biotech ETFs that you can jump on that are a little safer, but this is one that I like. It is leveraged, but I think this is a great play. I think we're seeing accumulation here. I'm very confident. I'm fairly confident in that based on the reporting that I've been diving into and looking at the chart here, seeing these big buys at support. They're just waiting and scooping these bottoms, and I'm sure they're probably shorting it down, trading it up, shorting it down, trading it up, making some money in the in-between, which is the same thing Lee was doing. There's no reason that you can't buy a position. There's also a great discussion for the core position strategy that I want to discuss with you right now. I think this is a great time to do that, and it's a phenomenal example that will make a ton of sense to you guys. So 24. So I just wanted to mark that down so I knew. I want to give the editor that stuff so we can cut those specific things out. So the core trading strategy, this core trading strategy is very interesting. So say we buy 1,000 shares right here, and this thing pumps up to $12. We're up over 50%, and we want to sell 500 shares. Done. Made almost our money back. I will then hold those 500 shares that I was holding on to, even if it comes back down to here at $8. And then guess what? If I think that's support, I'll buy again. And then as it runs up, I sell only 500 shares. The goal for me in doing this is to get to a point to where the 500 shares that I am currently holding are entirely paid for, meaning the profits from the shares I've bought and sold have carried over and covered cost expense of the 500 shares I'm holding. I think that's a really cool thing to do because then I'm playing with house money and I've again protected capital at all costs. Now, more importantly, what you can do from that point is if you are holding 100 shares or more, you can start selling options against those shares. You continue holding those 500 shares, and then you sell 5. Like say in your analysis, you're saying there's no way this goes above 16 by February. You sell the $17 calls, 5 of them against your position. You get paid, say, $150 a contract. You've made $750 for selling those options that expire worthless. You're still holding your shares. You now have an asset that you can leverage to extend credit to or debt and get paid to basically loan those shares out. It's the most beautiful thing in the world. You get paid for the what if. And if you do it right, you can keep that money train rolling. I have 2 or 3 positions that I do that every month. I sell a new call, right? I'm at a point where the shares are up like 400%, but more importantly, my total position, like risk reward, is like 1,000 to 1 now. Or sorry, reward to risk is like 1,000 to 1 now. Because I've been selling that options premium every month. I've been selling calls that I think will be slightly out of the money. And guess what? Here's the best part. You sell those calls, $17 calls, and they paid you that $750 to buy them. Say it runs up and it's at $17 at the time of expiration. They exercise. They buy your shares for $17, and you still keep the extra $750 they paid you. Win, 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 win. Can't beat it. That's a phenomenal strategy that I think should definitely be employed in your portfolio if you're not already. Moving on to keep this moving. Snapchat. Very interesting here. This is another one that's at the top of my watch list. I want to keep a very close eye on. I'm not even going to address the whole TikTok speculation rumor. I don't even want to get into that because I don't stay on top of it enough for it to be relevant. I think Snapchat is a very interesting chart right now. I think we're on the weekly here and we're looking pretty strong. We're starting to pick up. We have to see volume. We haven't seen volume, and thus there's nothing to talk about yet. So we're not going to do too much. But I think there's becoming something to talk about with Snapchat. I think Snapchat's getting to the point where it's soon to be worth talking about. You've got, hopefully you'll start to see more accumulation down here, is like we really saw here. Like if you look here, it's like this to me is big time accumulation, right? People are buying this bottom in anticipation that it holds. Sellers came in hard. The buyers scooped it right back up. That's strength, right? A previous audience that was done with it is distributing it to an audience that thinks it's a good investment moving forward. That's how this works. People are just handing stuff off to each other. However, I don't see enough volume or strength in terms of the price action to say, like, yes, I'm a buyer here. Let's do this. Let's run. If we would have got it down here at like $5-6 or whatever it traded down to, was it $7? Yeah, I think that was smart, right? Because I mean, we're trading down $4 in 2018. I think Snapchat's on top of it. I think Snapchat will eventually just get acquired because it seems like they have a lot of the augmented reality tech that could be implemented into a number of the other very large platforms. I could honestly see this being a matter of time before Facebook buys Snap. Wouldn't surprise.
Hey, Dad, do you think I can do 2 cat flips in a row? With 2 bottoms?
Do what? Wait, whoa. 2 kick flips in a row?
Yeah.
Two kick flips in a row? I think you can do it.
I'm not really an expert at that much.
Yeah, give it a whirl. Give it a shot.
I'm not really an expert at that.
2 kick flips.
Do you think I can beat the world?
I hope they get those kick flips. Don't ever think you can't do a kick flip unless you're me, because I was never able to land a kick flip. I tried for like 4 years. It never happened. Hardening. Nevertheless, I was never meant for skateboarding. So I don't want to go too much. I don't want to waste too much time because it's not there yet. I don't think it's ready. I just don't think it's ready, but I think there's something to absolutely stay on top of, because I think there could be a very real possibility that this becomes ready and then booms in an instant. We are not going to trade the what if. We're not going to play pretend. We are not going to jump in early in anticipation. Unless you are a risk master, you've been trading a while, I really wouldn't employ that mentality at all. And I wouldn't get into trades in that fashion, because it's just subjecting yourself to too much risk that's going to not pay off in the end. So Snapchat, top of watch list. Let's see it above 1063. I want you guys to let me know. Stay on top of this. And if you see it above 1063 with volume, I'm talking relatively substantial. I'd like to see something like this. 400 million or so on the weekly. Let's look at the daily. We're not picking up enough, right? Like, we could see some accumulation happening here at the bottoms, but we're not seeing enough to say, let's go, right? It's widening, but we're not holding. I guess, you stayed bullish neutral after a really bearish day. Bullish neutral and then bearish neutral, bullish neutral. And now we're in the middle, right? We're in no man's land here. This isn't something I like. This isn't something I'm going to take. I just want to watch it closely, because I do think there is a trade to be taken here. I just think it's coming. It's coming soon. We just need to be on the watch out for it, because I don't think it's here yet. And when it does get here, I think we're going to make an absolute killing trade, and I'm kind of excited for that. So look, you can see it. You can see all the accumulation distribution points. We're just not seeing one now. Keep a very close eye there. And then let's go to PayPal. Very interesting. We absolutely crushed it on this trade. For those of you that got in, we called this at about $69. We saw some accumulation happening right about here. Called it at $69, and then boom, it pops up to 79. A nice 10% there for us to really take more than that, actually, because to 79. So what is that? Like 12%, 12.5%. On a long-term position, which is absolutely phenomenal. Guys, remember, most people anticipate an 8% annual return. We saw it in 4 days. As we scoop this, again, for those of you that haven't been on this live stream, I hope this is your wake-up call to be here every week. Did we not, guys, identify this range with PayPal? And then we said, you know what? We're just going to be ready, and we're going to wait. It came up. All these stooges were buying up here, right? Like, oh, it's going to be awesome. And then it, boom, comes down and drops, what, 30%? Because smart trades will always pay you more, always, than anticipatory trades. There are people that will call stuff like this, and then it explodes. But guess what? They lost the other 9 plays, and they're break even. Don't be that guy or girl. Just don't. Be the smart one that had this charted out, was sitting there waiting like a sniper, right, on top of a cathedral, waiting for that shot, patient, silent. You got your shot. We hit 66. We waited for the confirmation that this was support. That was at about 69. We buy. We're up 12%. Now we're in a great position. Now we just hold to see if we can continue pushing through this range. As I suggested, To everyone, based on what I did, I took some profit when we hit 78, 79. That's 10, 12%. That wasn't anticipated in such a short time, but you got to take it when it's there. You just have to be smart and you have to take advantage of those opportunities, which I did. Still holding a core position. I have the stop moved up. The risk reward on this, I want to actually show you guys this because this is awesome. And I'm very proud of this. Quick. This is why it pays to trade smart, and this is just kind of a taste of what you have to look forward to. I hope for those of you that have been taking my trades in particular, this is really what my aim has been over the last. I hope I hope you guys have benefited greatly. I mean, to be honest with you, my returns have improved dramatically. I've been taking far fewer trades, but much more calculated and risk averse trades over the last 6 months. We've had quite a few, couple 100%ers on the long-term options. We got a couple still in play. We got some equity plays that are up substantially. The inflation hedge picks all beat above. They were all pushing above 60, 70, 80% return. We've been crushing on those, and I hope you guys are benefiting from them. And this is kind of just in line with the strategy that I had to kind of sit down by myself and build through the beginning of last year after I really wasn't, I just wasn't feeling as comfortable and confident in my trades as I once did. And I felt like oh my God, are you kidding me? This thing rebounded so hard. I'm so stupid to miss this. I would have bought the hell out of Starbucks. They're a bank, man. I didn't even see it come down to 70 bucks. Damn. Well, that's a phenomenal. Bravo. Bravo, my boy. Sorry, it's just real slow. There we go. That's why this is so amazing. I'm going to switch my screen over here so you guys can see this. And for those of you that haven't logged in, you absolutely should. Because this is absolutely amazing. What Sir Pookie has done is beyond me. Hey. Um, so that's a really good question. I'm going to address this in a moment. Yeah, Pookie, I don't know what you did, but I don't like it. What I can tell. Oh no, we need to deselect all on the shot callers part. Like you have to like independently go bump 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 bump, pick them, or maybe we don't. I don't know. Don't listen to me. Why I'm not the tech guy. I'm switching to the website. Right. So as you guys can see, go to my screen if you could. Here, does everybody see that? Good to go. Wanted to give you a quick walkthrough of the new system here. System now walkthrough it, but really look at the risk reward on this trade now for us, right? Like I updated it based on where we were at. We are now currently sitting at a 29 to 1 or 1 to 29 risk to reward. Our reward is 29 times greater than our risk. For every $1 we're risking, we are anticipating a reward of 29, right? That's the ratio, at least. Phenomenal. Why? Because now we played those ranges perfectly, right? We bought the bottom of that range. We got our entry. Hopefully everyone has taken some profit at this point. We're up 10% plus, 10, 12%. So we've recollected some of our capital. We can now treat our stop loss totally differently in that we can move it up to our entry, meaning we break even on the rest of the position at worst, but there's no loss on the table, zero loss. And at the least, we should see PayPal move through the rest of this range and scrape another 10, 15% on the trade, right? So we're essentially playing with house money at a certain point. That's the best way that we can trade this. And for those of you that haven't seen this yet, the goal here is to make it for those of you that aren't. I'm assuming everyone here is likes Discord to some degree because you're here. But for those of you that don't and you find it difficult to deal with, you are going to be able to use the website for everything. As you can see here, you can search through all of the trades. You can go by dollar value on the trade, right? Like a $20 stock to a $40 stock. You can look at risk reward. Like I want only 1 to 5, 1 to 6, 1 to 7. Our minimum is 1 to 1.5. You make 50 cents, right, on everyone. So your always reward is always higher than your risk, which means you only have to win half of your trades. If your risk is always if your reward is always 1.5 that of your risk, you can only win half your trades and still be profitable. That's the goal here. The idea is that you're following the alerts and that you're winning 75 to 85% of your trades, which means your profit will be that much greater. You can then look date ranges if you know a specific play you're looking for. You could do it by trade type. You can look at only swings, only spreads, only day trades, only short, only growth. And depending on your subscription, you might not have access to all that. I know that's a PB advanced thing. You could also look it up by shot caller. So if you're only taking one particular person's plays, you can use that to find their plays, which is phenomenal. All of this will be hosted through here. We're going to have push notifications at some point in the future, which means you can easily just set this up to where it just sends you an alert on your phone and from push notification standpoint without ever opening Discord, because I know some people's work blocks Discord. So you will now be able to get around that.
175.
Eh?
No, this one, 380.
What was that? Craig.
Oh, hello.
Hey, Craig. How you doing?
What's going on? I'm sorry. I didn't even know I put myself on voice. I apologize. Let me mute myself.
No, I want to know what's 380, dude. I want to hear it. We're on the edge of our seats.
Oh, man. No, my wife was talking to me.
What does she think was 380? Were you guys talking about the spy over dinner?
No. We were talking about a bike that I purchased for my son.
Oh, okay. Well, congratulations. Enjoy that. It's the best thing in the
Thank
world.
you, my friend. I appreciate that.
Yeah, of course, man. Welcome. Welcome.
Thank you.
Right on. Oh, wait. This Craig. You're Craig. I know you.
How you doing?
You're Craig that was on the podcast with Duck. Or MetaMatt, whatever you call him.
MetaMatt. Yeah, you know that guy, right?
He's what the Duck. I don't go by that
I just joined
MetaMatt
Discord. He was telling me about it, and I realized I didn't have my volume. I didn't have myself muted. So nice to meet you.
Nice to meet you as well. Feel free. Go ahead and pop or Duck. One of you pop the YouTube link in the chat. You guys check this man out. He's a crypto man. He dives into a number of topics in the surrounding atmosphere as well as in the crypto industry. He just had Duck on the show. It was a very interesting conversation. You guys were talking crypto. You're talking marketing. You're talking business. I loved it. Talking life. That's what we're about.
Thank you, my friend. Yeah, MetaMatt's my co-host, and we've got a really good lineup this coming month, so I appreciate that, and I'm going to mute myself, listening to you guys. I appreciate it.
Welcome, my friend. Glad you're here. So, yeah, we're going to go back to Webull here. If you guys can see it, I just wanted to show you that really quick. 29 to 1 on the risk reward. Jot it down. That's what I'm talking about here, and that's my goal in moving from this to answer, I think it was Snowflake's fair change. You said that. So for those of you that have been here, how do we reconcile the buy-in method, buying down, cost averaging, et cetera, with the new strategy that I've been doing? Well, very simple. I think, at least. I'm going to try to explain it as simply as I can. You can still follow, in my opinion. You could still take that strategy to a degree. I mean, the goal here is to just be more dialed in, more calculated. The problem we have is like a lot of traders that are new struggle with the buy down in a sense that they might make a larger purchase. Say if you're making 4 purchases, you have $100, you want to buy 10 shares, then 40 shares, and then 40 more shares, right? So you want to buy in your position over time. I think a lot of people that are new at trading really struggle with when do you make those bigger buys, right? Because if you buy them on the way up and then your cost basis is way up here and then it comes back down to support, you're really enticed, in my opinion. You're motivated almost to make another purchase. Now, what happens if you make that other purchase? You are now over allocated in the trade, meaning you set out to buy only 100 shares, yet here you are with 150, which is 50% greater than what you intended for it to be. So if you're trading with a $1,000 account, right, and you intended your total position to be $200, 20%, not a small amount, and you then make it $400, and all of a sudden half of your portfolio is in one trade and you are currently red on it. And that doesn't feel good. I understand that. So then people get even more scared, right? And not only are they blowing up their portfolio, but they're making decisions that are counter to their own interests. Not because of anything wrong other than like they just didn't know, right? And so that was my biggest thing with the buy-in method and all that, is like we were really struggling with communicating that effectively enough so that people understood exactly when and where. So what we did is we adjusted the way that we trade to cater to that, to make it more so that we fit more seamlessly with what you guys need rather than trying to make you fit into the box here. So in identifying these ranges and taking more of a fixed risk reward ratio trade, we can still use that buy-in method, right? So let's look at PayPal, for example. This is the weekly, right? Let's go to the daily. So we're only interested in buying when we get around this area, right? So if we were waiting for confirmation this holds up, we come down, right? We just first started discussing PayPal right about here, is about the 19th, is right before Christmas. PayPal's come down as low as 67, at which point I said, hey, this is really interesting to me. If it can hold this range, I'm going to buy the confirmation and we're going to trade this thing up. We had 7, 14, 21, 28. This was almost 30 days went by where there was opportunity to lever into this position, right? Now, for those of you that know the buy-in method, there's no reason you can't still trade that way. The difference is, and this is the important part, that we are trying to buy as close to this bottom as we can on the most of the position that we can. Sorry, I just moved that line. We are trying to buy this 67.20. We were trying to buy this as close to this bottom as we can. Now, that's why I said 69 or above. It came down. I'm not buying it at 67. In the cost averaging method, most everyone is. I was not, because I was not convinced that we had confirmation that this trade was even going to hold up. I liked this range. I wanted to buy around 69, right? When it came down below 69, I lose all interest. Why? Because we're not in the channel or the range that I want to be in. That tells me that I can have the highest confidence that this is going to turn bullish and I can go long, right? So try to break that down more simply. We look at it right here, right? Strong bulls are holding up support here as best they can. Below that, they're losing terribly, right? And we're trading down as low as like 66 and change. In the buy-in method, I could see members thinking they're getting a deal, right? Buying in slowly down here, 67, down here, 67.30. Maybe they buy again, 68. In this trade, that would have paid off, right? But what about the trades that don't pay off? What about the trades in which it doesn't build and hold support, and then we don't see confirmation that it's held support and it's blowing to the upside? On those trades, they lose. On these trades, they win. But this strategy is more broadly applicable to the general markets and every trade we're going to take. So, in my opinion, it was just easier to change this than try to change the way everyone does things, right? You can still use the cost averaging method. However, you are not doing it if it's below the break price that we indicate. If you want to, I mean, by all means, your money, your decision. But for example, on this one, I was not a buyer under 69. I just wasn't. I'd much rather buy the confirmation and pay a little more than take the risk and pay a little less. Does that make sense? Pay a little more and buy confirmation rather than pay a little less and take on way more risk. Does that answer your question? Fair change? I hope it does. If it doesn't, please say no. I'll try to redo my response to you. Okay, cool. I saw it. Sorry, I wasn't scroll all the way down. Happy to hear that. Yeah, and as Pookie said, the alerts, like our overall trading strategy hasn't changed. It's just some of the details of the trade do. And I would argue that the way that we've adjusted some of the trades we look at even is to the benefit of everyone, because we're looking at much higher ratio risk reward trades on the catered to the reward side, right? I'm very excited. Like I hope, I don't know, I hope you guys have already seen it with some of the plays. Like we had that Netflix trend channel play, which that's the last thing we're going to go into real quick, and then I'll take some tickers that you guys have in mind. But look at this as a perfect example on our Netflix trend trade, right? So, as you recall, we were talking about Netflix when it was trading down here at 175. Second. All right. So, the Netflix trade that has already yielded us 30% on the short side, $1,500 return, and over 20% on the upside, which means that we are up substantially. The cost of our contracts are cut in half thanks to the short we played down, and our long contracts are riding into the wind. 2024 expiration, we're going to trade all the way up to here and make a killing, right? Our shares are up substantially. I think I'm up about 40% on the equity that I have. Now, we were talking about Netflix down here, 174, 175. We weren't buying. Why? We didn't know if the bottom fell out yet. We just didn't know. There's no way to know. No one could know. And to be honest, it was such a volatile market that it would have been really ignorant to be taking positions down at that price unless you already had a substantially sized position that was up a couple 100%. So if you're like an early Netflix investor at 30, 40 bucks, by all means. But for those of us that were looking to get into a new trade, it would make no sense. The risk reward just wasn't there. The setup carried too much risk, and the market was just far too volatile to the downside at that point in time to take a trade like that. So what do? We watched. If you guys remember that break of 200, I remember I posted in the options chat. Some of you that were there might remember it. That break of 200 was what I was waiting for. We then traded calls on this huge breakout here from 200 all the way up to about 250. Those made a couple 100%. We traded the confirmation, guys. We waited until we were certain it was happening, and then instead of getting a 100% return, we took an 80% return. So think of it that way, right? If there's a 100% return on the table, you can squeeze that extra 20% in, but you have to take a ton of more risk. You don't know if it's going to work out. Whereas you can wait for the moment in which you can look at it and say, that worked out, and take an 80%. And you took much less risk. If we're protecting capital at all costs, we've won. And we did on this trade because then we continued buying shares as long as it held above, I think it was like I think I was looking at like 230, right? So we were buying shares when we found support at 230 and it held up. We bought shares, and then boom, it gapped up like a week later. Okay, we made a substantial money there, and it's held up, pushing as high as 333, at which point I took profit on a majority of the shares. I held about 40%. We're still rocking and rolling with those. We got our options still. We crushed it. That's the difference. We were watching when everyone else was speculating and taking risky buys, and we bought when the smart money said, yep, game on, let's go. And we traded risk averse, but profit first, if that makes sense. Risk averse, always profit first. And we made a killing. It was a really smart trade that made a lot of money. That's what our aim is here. So again, we got strong support bounce here. We closed that short. We're just riding along. We want to see it hopefully test as high as about 322, and then I'm going to start considering adding another short against it just because it's going to probably consolidate in this range, and we just want to protect against long-term downside risk. Yeah, Pookie, that's a good way to put it. It's kind of like insurance. You're sacrificing a very small sliver of that profit potential to dramatically decrease the risk. Like, it's, yeah. FedEx, we absolutely crushed it. If you guys remember, I think, did we buy it? We either bought 171 or 173, another perfect example, right? Boeing bounce, support bounce right here, right? Follows that trend channel perfectly. Now up to 186. So call it a, 7.5%, 8% return on a quality name that's going to keep going more than likely. That we absolutely nailed. And yeah, those are about all the plays that I wanted to go through. Shopify, we're still holding up here. I will just update this one. I'm still holding it. We got a nice inverted head and shoulders here. I think we're about to boom, which is phenomenal. We tested low as 2363. Big buyers came in. Digitally scaling, infrastructure for retail on the internet. In my opinion, it's a no-brainer. They're the best positioned, and they're just sitting there collecting those fees, and they don't really have much tech upgrade to really make. So I think this one's going to be a no-brainer in the long term. We do want to see it hold above 34.76, give or take. Otherwise, then I will consider exiting. We are green on the position, so it'll be a no-loss trade at this point for me. So mark that down in the notes if you took this one. But I do think this one will hold up. I think we're safe here. We did push size 45 after we took the trade, so you had a chance to take almost 30% profit on this one. If you didn't, you're still holding. I think this is going to be a pretty good trade again. Inverted head and shoulders looks like it's forming here. We're probably going to see another shoulder form, maybe come down to about $30, which wouldn't be the worst. And then we'll see a boom because remember this one's a long way from home. In my opinion, home is right about here. I want to see this about 80 to $120. And I think we're going to see it. So again, remember, these are like 3 long-term positions we're expecting 30 to 80% on. If you guys have a $10,000 in a long-term account, you've allocated it 30% in each trade, you should be making 4 or 5. You should be basically making the cost of a lifetime membership on 3 trades over 6 months to a year. That's my goal here. Is this should be, as much as being here for the active trades, the passive trades should pay the bills too. And that's my goal, is to ensure that you have everything you need so that you can allocate a certain percentage towards short-term gains, quick trades, day trades, options, whatever. But more importantly, that you are every month taking profits and allocating towards your long-term positions, and then looking and making sure that you're taking from those growth channels, the blue chip channels, that you're taking those trades that are going to drastically improve your long-term results without a smidgen of the risk that you're taking with like an active option day trade, right? Your money will then be working for you passively while you're working on your skill at actively trading. That's the point. The long-term stuff we do here doesn't take skill. It just means you just have to read. The short-term stuff takes some skill and discipline and foresight, right? But my point I really want to drive home, because again, you guys are the lucky ones. You're here. You've done the work. Everyone else has quit. Let them give you the prize. That's fine. But in order to get the prize yourself, you need to be taking full advantage of everything you have, which is the long-term allocations while you're working and grinding on the short-term allocations. Do not sleep on either or. You want to have balance, and the way you achieve balance is by maintaining it and being mindful of it. Okay? So we want to be building. I don't even care if you got only $200. 100 of that should be in a long-term portfolio, just slowly growing. Now, I get that's a lot harder. It's a lot slower. But for those of you that are trading, and I know quite a few are trading with 5, 10, 15,000. I know that's probably the midline of most members. We need to have that in some long-term smart growth. Like you could put some of that in PayPal, position trade. You have fixed risk. You set it and forget it. You set the stop, you set the take profit, and you move on. Done and done. You're talking shop. I don't know. As far as options go, honestly, I'm not messing with options with this right now. I would sell options against this right now, personally, because I think we're just going to consolidate for a while, and I think we need to. I think we have a nice accumulation phase happening. I think institutions continue to batten the hatches and rally their positions. I think a number of like larger retail traders are also like levering a position in this, as I am, because I think they see the writing on the wall. This company is primed, and they're in a prime positioning for growth over the next decade minimum. So I would wait and see. Personally, I think wait and see if we don't get another shoulder down here. If this is it, 32.32 is the bottom, then hell yeah, leaps could make sense. But we don't know, and it looks like it's just really just hanging out in consolidation right now. This double top isn't too appealing either. I like that's green on the entry. We've already obviously had 30% profit on the table, but I would just trade this one safe, play this one smart. On the weekly, it's not strong enough for me to say, like, yes, let's run it. I would personally like to see some pretty strong price action above $41. At which point then maybe, yeah, we find a support bounce, a little bit more of consolidation to the upside, and then, yeah, we're trading looking for 60, $70 on the options. Until then, that's a hold on for me. Board, Take a look at SWK Black Index. You always look at the weirdest stocks I would never look at. Ooh. Interesting. Wow, that's like a psychotic chart. Ooh. Why are they at COVID level? Why are they at COVID level low? And really quick, if you guys have tickers, I got about 10 more minutes in me. If you want to drop them in the chat, we can run through them real quick. I just wanted to see what Mr. Slip had to say about this one. Try to watch the chat. If you see the ticker you're thinking of posted, like, don't post it again. Just emoji it so I know, like, hey, 4 or 5 people are interested in this, please. Would be so kind. Would be mine. That's okay. But we love you. This one's interesting, and there looks like strengths coming in here. That's definitely a bottom. That's a pooper scooper right there. I think that's a new name. I think we need to adopt for some of the leagues. He finds these pooper scooper plays that are like just a bottom of the barrel, like they've just destroyed, and then all of a sudden he scoops it up, and then it's rip and run up 80%. Bottom pooper scoop. Big Daddy Mouse, if you trading with $100,000, my friend, I think you shoot me a message. You and I'll talk like we need to be very mindful about that because you could do as much damage as you can benefit. I just want to make sure that you've got everything lined up, dialed in. I don't know how long you've been trading, which I don't mean to insult you. You might have been trading longer than me. I don't know, but shoot me a message. Let's like chat about that. Not really a question I could just answer like, hey, yeah, sure, go for it. You know what I mean? I don't want you to end up in a position where you're like, shit, there's 30 grand. So, all right, we're gonna start with Affirm because I guess Jake just likes rubbing it in. That's like one of my biggest red letter scars of my portfolio, and he knows that, and so he's trying to make me feel bad about it. This one's looking rough, man. It's killing me. I love the concept. I like the company. Just looking so rough. And my concern here is that debt being as expensive as it is, they are going to struggle, even though they're like, it's the smartest. Like, it makes so much sense. It makes so much sense. But my worry is, I saw somebody posted the other day some research that kind of insinuated that there might be a number of car repossessions, which means that people over leverage themselves and they are going to pay the price for it this year. That's a problem, right? What does that remind you of? It's not a housing crisis situation. Don't panic. That's way different. And the banks failed to do the right thing. They were just giving out dog shit mortgages. Should have never had them in the first place with insane variable interest rates. That's not what happened. The government just printed too much free money. People felt a little bit too rich. In my opinion, all of the middle and top end talent is now working 2 jobs. That's my opinion. Is that the labor pool, they think it's shrinking, but in reality, they're just realizing that some people have a much greater, like, first of all, that jobs are incredibly inefficient, right? There are so many times at companies where 40, I would assume 30, 40% of the company could just be liquidated and they would be perfectly fine, right? Because those companies, look at Twitter, look at that example. There's people just hanging out eating bagels all day, making 80 grand a year because shit scales too fast, too big, and then they lose a lot of oversight. They lose a lot of the granular stuff that really matters. Bigger companies. And I think that a lot of these companies have a ton of bloat. And I think that with that bloat, moving to remote work was genius. I think for them, for their bottom line, I know it killed them on the real estate side, but on the bottom line, I think it has dramatically improved the efficiency of these companies, but only because I think that the top 30, 40% of the talent pool, right, that has the qualifications to work these remote jobs, I think that they're working more than 30 or 40% of those jobs. I think they're working probably 60 to 70% of them. I think that the most skilled, disciplined, the best employees, the best workers, I think they're working too. Because they found that these companies are so inefficient that the workload they give them is only 15 hours worth of work. So they get that done, and then they have another 35, 40, 50 hours, depending on how much they work, available. So why not take a second job, also remote? So now these people have basically doubled up on their salaries, and in my opinion, they're probably getting paid equivalent to what their skill and experience is. And in doing so, they've gotten a lot more buying power. And more buying power, which is very interesting, they can be a little more luxurious, right? And then as the government continued to print more free money through COVID, people that aren't good at managing money just saw a payday and went out and in order to, satisfy a desire, and whatever it is, what it is, they went out and purchases couldn't foot the bill on down the line. And I think as those repossessions happen, companies like Affirm are going to get. I'm concerned. Concerned as to what happens if and when people time down a lot. And what I'm seeing here as far as price action is not looking good at all. We need a rescue, bullish support. We need Warren Buffett to say, you know what, this is the best idea I've ever seen. I'll buy $800 billion and do it. So that's that. Yeah, Lee, I hear that. And to follow up on what B Money said, I think, yeah, the home improvement thing was a huge boom. Huge boom. And then the home renovation thing, like I was looking at, I was right. We bought a house. We moved twice during COVID because of all this stuff. And I bought right before it ran. Thank God, locked in that 2.7, baby. Get some 2.7%. And it's crazy to see just how egregious the prices are. It's like it's offensive. Why? Because 70% of the home buying over the last 2.5 years was institutional, meaning large scale corporate entities, hedge funds, whoever, that were just looking to shore up the rental market. Means that there's far less access. You're forced to rent, and being forced to rent, you're basically paying the bills for them, which means that they have a passive income source based on all this free money the government gave them. Basically, the government bought all the houses, which I guess it hedges the housing market. It's insane. There you go. BlackRock bought 68 subsidiaries, I'd imagine. Sanity. So I think that spooks me a little bit as far as how that companies like Affirm that are dependent on that cheap cash and buy now, pay later spooks me. I'm down a lot. So it is. We have a lot of promise. I think they're the best position, but we'll just have to wait. We need to hold here at above 865. If we don't, we could be in for a world of pain, man. World of pain. Let us pray. Palantir. One really shocked me. I thought this was it. I thought we had support. We were going to hit the bounce, and then we're going up. We didn't. But I do like that volume is starting to scale in. We're starting to see support here. I'm not as concerned. We do need to push up against right here. So that's our descending resistance. Get that descending resistance. We got to beat. That's our descending resistance, right? We need to push above $7. We need to push above 7, and then our next target will be above 8. Then as we push through this channel, I think we're going to follow a very similar pattern to what we saw here, running highs about 1150, 1160. Very, very much so. I think that we can there, and we can. I've been accumulating shares down here around 650. And I'm going to hold those for right now. I haven't really thought much about it past that. I just really want to see how this next week, 2 weeks of consolidation pans out. On a weekly basis, buyers come in. As long as this process as our new low and our final low, we're good to go. Create a new low. I'm just going to take the loss, take that loss. Holding past that, I don't think is a very prudent decision. Great company with a ton of cash. They're very well positioned. I very much so believe the mission that they're trying to accomplish. And I think that they have the expertise, the government contracts, and the cash flow to do it. So I do think it's a very smart play, hence why I'm holding. NIO is absolutely bottom feeder right now. I do think that this is not a bad position. If you look right there, so we just hit top of the past range, right? So we cleared this gap, which is good. We had to clear this gap. And now we're just sitting at a nice consolidation range. I think this volume coming in is starting to support the bullish thesis. I think a buy around here is not a bad call with a firm stop in place as a position trade. I do still think they're well positioned back by the Chinese state for the most. a matter of how much will Tesla take from them, if any at all. I mean, in my opinion, they were almost a hedge against Tesla, thinking that they would expand their market. They haven't really. But that one's still strong watch. Again, we traded this from $2 up to about, it was a 65, 66. We made an absolute killing. I'm still holding a chunk of shares, which sucks to be us, because they're now only up 500%, whereas they were up thousands of percent, but that's okay. We took our profit on a chunk of it, and now we move on. And look at one more. This will be our last one for the night because I'm losing my voice. ENPH. Damn. What's going on here, man? It's phenomenal. It's a great company. I like them a lot. Might have some opportunity here. Interesting. Is Amy trading this? I feel like Amy trades this. Interesting. Very, very in. Yeah, there he goes. Trade this. Yeah, I would definitely follow her path on this. I think she trades this one a lot, and she's pretty familiar. I don't really like that little double tops. It is still holding trend here, so as long as it stays there, it should be fine. Like on a more long-standing bit, if it comes down from here, I think that's a realistic like buying opportunity, maybe 210, 250. I think that'll definitely be on a close watch. I think that's one to watch. Fun to trade options on. Definitely follow Amy's eyes on this one. I think she's got a very good eye for this one, and I think she's traded it. She's comfortable with it. So I think her opinion is probably the most beneficial for you to get on this and take into consideration as what could be done. And now that I'm looking at this, I think we definitely come a little bit sure. I think we definitely come back down to like $200, at which point that might be like a push buy and really pick up here and like hold this resistance it was holding. It was trying to turn this over into a new range and a new trend line, and it didn't. But if it can, I would say that that would be solid if it can hold up and you get confirmation. Volume is coming in here on the sell side. Very careful as it's selling off. Intel's having a pretty big push too. It's a good find. I like that. Over so I would really say over 29, I think is that's your price to beat, because look, the bulls tried and they failed, and then they made it up, but then they sank. But that's clearly the point. That's clearly the pivot point, in my opinion, above $29, where you start to really get some meat on the bone to take off here. At which point you can hope that you fill that gap up to $38. This one will be interesting to watch. Intel's a good company. Made the chip and processor. Good find on that. I think that's a good find. Again, that's an over $30 kind of deal. And again, we look at that same way as we talked about, like the difference between buy down and like our new like fixed risk reward position trade mentality is that this is no good to us unless it's over 30, right? Because that's where it needs to be above in order to retest this range here, which is at about $34. We want it to go there, right? That's nice 10-15% on the trade. If it's below 30, we know it's not going. So why not wait until it's above 30 to then buy? And instead of making 15%, we make 12%. Does that make sense, you guys? Does that make sense to everyone? I'm looking for some validation here. Okay, cool. All right. I'm going to get this over to Tyler. He's going to get it published. If anybody asks in the chat, if you wouldn't mind, just please share with them that it will be published at the very latest, late tonight, so that they'll be able to view it before market open. No worries. I love y'all. I hope you stay blessed now. Trey Smart. I hope you mark down what we talk about and you follow it. And yeah, if you have any specific stuff, just let me know. I'm always here. I love y'all.